Assalamu alaikum. Welcome to the Telikilaas series for grade 12 accounting. In today's lesson, I am going to discuss financial statement of limited companies. This is the first topic in our unit 2 corporate and management accounting. And the learning objectives of today's class is a brief introduction to financial statements. But the preparation of financial statement and the format will be discussed in another video. Auditor's report and director's report also we will be discussing. First of all, what is meant by a limited company? A limited company is a legal entity which has a separate identity from its shareholders. Shareholders means the owners of the company. The liability of the shareholders are limited, unlike partnership or sole trader. Suppose a partnership or sole trader liquidate, the liability of the owners will be unlimited. That is, they have to settle the debt of their business by selling the properties of the business, and if it is more than that, they have to sell their personal properties as well. But in the form of company, they will lose, or the shareholders will lose the maximum the amount they invested. So it is known as limited liability. It is an important characteristic of limited companies. And in this slide you can see different multinational companies, and you will be familiar with these logos, right? Then companies can be formed either public or private. Public limited companies means they can issue shares to the public, and it will be denoted PLC. STO is an example for public limited company. Private limited companies are not allowed to issue shares to the public, and they will be denoted LTD. Then regarding the registration of company. For registering a company, we have to prepare two important documents. You may be familiar with that. The first one is Memorandum of Association and Articles of Association. After preparing these two important documents, you have to register your company with Companies House if it is in UK. If it is here, it will be registered with Ministry of Economic Development. In different countries, different institutions will be therefore registering companies. Then in UK, there is a Companies Act for regulating the limited companies. That is Companies Act 2006. And at the end of the financial year, all public limited companies are obliged to prepare and publish the financial statements. Sole trader and partnership also will prepare financial statement, but they won't publish it. But in the case of limited company, they have to publish, and they have to send a copy of these financial statement to its shareholders. It will be included in the annual report. We will discuss what is annual report and what are the contents of annual report in detail. Then this financial statement will be prepared in accordance with the Accounting Standard 1. Let's discuss what are the financial statements to be prepared by limited companies. The first one is Statement of Profit or Loss and Other Comprehensive Income. It is prepared to find the profit of a company. Similarly, sole trader and partnership also will prepare SPL to find their profit, but it may not be published, or it is not required to publish. But in the case of limited company, it is compulsory for them to publish. Anyway, in SPL of limited company, there will be many split for profit. In sole trader, there is gross profit and profit for there, right? But in limited company, there will be a gross profit, and there will be an operating profit, and there will be profit on ordinary activities before tax and profit on ordinary activities after tax. There will be a classification of profit. We will be discussing this one in detail when we discuss the format of financial statements. Then the next important financial statement is statement of changes in equity. A simple format of statement of changes in equity you already learned in your grade 10. That time there were share capital column was there, general reserve was there, and retained profit. In A level, there will be more reserves and more transaction. We will discuss the preparation as well as the journal entries for recording the statement of changes in equity transaction. And it is also prepared in accordance with the accounting standard 1. The next financial statement is statement of financial position. Statement of financial position is prepared to know the position of a company, especially what are the assets, liabilities, and its equity at a particular period of time. It is similar to financial position of sole trader or partnership, but we have to follow the accounting standard 1 here. So there will be a format to be followed. And this format we will discuss in the coming videos. And the next statement is statement of cash flow. This may be a new term for you all. Actually, statement of cash flow simply means it's a statement to prepare to know the flow of cash in the business. Here cash means bank also. So what are the sources that cash is coming into business and what are the where they are spending the cash. This will be discussed in another chapter. It is a separate chapter in our unit 2. So this also will be discussed. Then let's discuss about annual report. An annual report is a comprehensive report on company's activities throughout the preceding year. An annual report intended to give shareholder and other interested parties information about the company's activities and financial performance. This annual report will be published and it will be sent to its shareholders. The main contents of annual reports are the financial statements we discussed already. Those 4 financial statements will be included, and there will be director's report, auditor's report. These 2 we will discuss in the coming slides. And most of the annual report will be starting with chairman's address, and there will be statistical section, that is how the company is performing, and chart graphical representation how their performance in the past years will be given. This is an important document for investors. Then we can discuss auditor's report. First of all, who are auditors? Auditors are independent scrutineers of the accounts. They are reporting on how directors have used the funds invested by the shareholders. We know the working of the company. The company will be run by directors. They are the selected members among the shareholders, and they will be running the business on behalf of the shareholder. So to make sure or to know how they are spending the investment, how they are utilizing the fund invested by the shareholders, and an outside person will be monitoring, or he will give a report. That outside person is simply, we can say, auditor. Many of you will be aspire about this auditing profession, right? Then after checking the final accounts and other documents, the auditor will give a report. It is known as audit report, and this report may be qualified or clean report. Clean audit report means the name itself, everything is perfect. I mean, they are following the accounting standard in preparation of financial statement. A qualified report means there are some problems or they are not following all the accounting standard. So qualified report means there are some problems in the financial statement of the company. Clean report, or it is also known as unqualified report. That means they are following everything. Don't get confused. Unqualified report means everything is as per the accounting standard. Qualified report means there are certain issues. Then auditors are playing a vital role in the corporate governance. In exam point of view, auditors' reports are very important. You can expect an evaluation question from this part, like the role of auditor in ensuring corporate governance or the importance of auditors' report, etc. The concerns with the auditor report actually, they may not be independent, they may just go along with the wishes of their client, or they may be influenced by directors, undue influence. It is known as undue influence. And the auditors may do non-audit work also, like preparation of account, tax related works. So directors may influence the auditors and auditors may give report in favor of directors. That is an important concern regarding auditors report. And another chance is auditors may be misled by directors by giving false information. In this slide, you can see the world famous auditing firms like Deloitte, EY, PwC, KPMG. These all are world famous auditing firms. They carry out most of the multinational companies' auditing works. Then let's discuss directors' report. Directors are the representatives of shareholders, and it is their duty to inform shareholders about the performance of the company. The director's report may be assured the company is acting in an ethical manner. Director's report include the details about the performance of the company and the future developments, and it include any political or charitable donation made. It is compulsory by law to prepare the director's report. The drawback is directors may use this report to window dress the accounts. Window dress is actually a type of fraud. The directors are trying to show what they don't have. They will be showing very attractive profit or assets section, equity section, but actually it is not the case. So it is a type of fraud. They are doing it for attracting investors. So director's report is an important report to be published by the company. And in exam point of view, there will be evaluation question on director's report. Then we can discuss the importance of disclosing, continuing, acquisition and discontinued activities. The operational areas of a public limited company will be vast. They will have many subsidiary companies as well as joint ventures. So sometimes they will acquire new activities and sometimes they will discontinue some operations. For example, what you can see in this picture, can you identify which company it is? Yes, it is Rolls-Royce, right? Do you know what are the main areas of their operations? The main areas of operations are civil aerospace, power system, defense, etc. Then what about this car? Car manufacturing actually it is their subsidiary company. So suppose Rolls-Royce is going to acquire another aerospace company is the one situation. The another situation is Rolls-Royce is going to discontinue the production or they are going to dispose the manufacturing unit of car. So you understood these activities actually. Now we can discuss what is continuing activities and acquisition and discontinued activities. Continuing activity refers the activities or operations of the business which are neither acquired nor sold or terminated during the financial period. That means here in Rolls-Royce case, they will be continuing civil aerospace, power system, defense, etc. There is no change in that one. Then acquisition. In this case, they are going to acquire a new aerospace company. Then what about discontinued activity? They are going to discontinue the production of car. So the another point is when you disclose these discontinued activities, that activities value should be material, and it should be there should be a material effect on the financial statement. Then why we are, or how we will record this? Actually, this will be shown in the notes to the accounts. We will be showing the details of the discontinued activities and continued activities, and the profit and operations of each activity separately. Then what is the importance of disclosing continuing and discontinued activities? Why we are showing it separately? Like, we can show everything together, right? No, there is, it is compulsory to show it separately. First of all, the result of discontinued operation help to understand the difference that arise in the result of the past and future. So in Rolls-Royce case, the investors can understand that, okay, next year onwards, they won't get any income or revenue from selling the car. So that much change in the revenue will be there. And in the case of acquisition, okay, the company is going to buy, or they already bought another aerospace company. So next year onwards, there will be an income from this. So like that, they can identify the source of income and all, and they can think about their investment also. So this is the disclosure of continuing, acquisition, and discontinuing activities. I hope it is clear. Then next disclosure is exceptional items. First of all, what is an exceptional items? An exceptional item is a charge incurred by a company that must be noted separately in its financial report. And this exceptional items amount should be material. For example, a company is going to restructure in the sense, because some financial problems, they are going to reduce the number of employees, or they are going to take some correction measures. So this restructuring cost, actually it is normal business activity, but it is not regular. I repeat, there, this activity actually common in all business, but it is not regular. It will happen once in a while. So that is why it is known as exceptional items. Then disposing of any non-current asset, or like as we discussed, discontinuing operational cost. In the last case, what we discussed, the Rolls-Royce is going to dispose its car manufacturing section. So that time they have to make arrangement for this. So there will be legal claims or legal formalities will be there. They have to spend for that. So that cost also they can show as an exceptional items. And I would like to differentiate exceptional items from extraordinary items. These extraordinary items, actually it also happens once in a while, but it is extraordinary. For example, the current situation, this pandemic situation, all the companies will be affecting negatively, right? So they will show it as an extraordinary items. It's like a natural calamity. But exceptional item is a normal, but it is not regular. Then what is the significance of disclosing exceptional items? This will benefit the users of account, because they can see that the expense or revenue of the exceptional items will not be expected to be repeated regularly in the future. Then this treatment is required by law, and these exceptional items are reported separately, so it cannot be mistaken for sudden bump in revenue. If you recorded everything together, it will distort your profit. Now I am going to give a simple task for you all. You can download an annual report. It will be available any website. Like if you want a company's Rolls-Royce, it will be available in their sites. If you want any other companies, it will be available in their sites. So please download an annual report, and please read especially the audit report, director's report, and check is there any disclosure of exceptional items or continue or discontinued activities. So in this lesson we discussed mainly theory or evaluation topics: auditor's report, director's report, and disclosing of continuing discontinued activities, and exceptional items. In the coming videos, we will be discussing financial statement in detail. Thank you all.